Welcome to the Accounting Technology Lab, brought to you by CPA Practice Advisor, with your hosts, Randy Johnston and Brian Tankersley.
Welcome to the Accounting Technology Lab. I'm Randy Johnston with my co-host Brian Tankersley, and we are super pleased today to have as a guest Sasha Orloff, the CEO of Puzzle. Sasha, Brian and I have met in the past, and our opportunity to talk with him today is really a pleasure. So, Sasha, what would you like the listeners to know about you in terms of background?
All right, well, let's start, I guess. For anybody that didn't make it to Scaling New Heights or AICPA Emerge, we're Puzzle. We build accounting software for accounting firms. And I think one of the things that really kind of drive us are two parts. One, we think what I had mentioned on stage there is we think AI is going to be one of the biggest booms for accounting, and accountants are going to make more money because of AI than ever before and have a more important role. And two, I think accounting is getting more fun now than ever before because of AI. It is scary, but let's talk a little bit about why I think it can also be fun and interesting and exciting again.
Mm-hmm. Yeah, it makes beautiful sense. And what did you do before starting Puzzle, Sasha?
My background has been mostly in math and software. So I built fraud models and risk models. I built a lending business. I built a payments business. I worked for a nonprofit in Central America, helping sort of poor women in rural areas start and grow businesses to feed their families. I worked at the World Bank on their technology team and sort of always had a sort of a passion for where software can help sort of make economies, industries, and communities stronger.
Yeah, super. Well, our listeners who've been with us for a while know a lot of, probably too many TMI, if you will, personal information about Brian and I, but because I have a computer science degree and a light physics degree and first wrote AI on Lisp in 1975, so over 50 years ago. Yeah, I've been around the block once or twice, so I appreciate some of the neighborhoods that you've lived in. And see, I think your position and thinking that the future of accounting is neither autonomous nor manual, where AI can really handle the repetitive prep and the accountant gets to make the judgment calls and then signs off. So nothing really reaches the books without the humans deciding. I think the firms that will really win in the end will use AI to make their accountants more valuable, not really replace them. There's so much talk like that I think is just false. So
Well,
this,
I mean, again, you can look back at the beginning of my career in the early 90s at Coopers and Lybrand with 5, 7, and 14 column paper. It's so many times. I don't have it here in front of me now, but I still have the metal ruler that they gave me on August 24th, 1992, when I walked through the front door the first time. And, they gave me that and a mechanical pencil and a bunch of paper, and off I went to work. And I had to buy my own 10 key even. And so I mentioned that to you here because I am so glad we're in the computerized world we're in today, as opposed to the paper world that I walked into 30 something years ago. And I think the people that come after me in 30 years are going to go, what do you mean we used to key stuff into software? They're going to look at that and it's going to be like us watching Star Trek where they talk to the computer, and going, wow, that'll be cool when that happens someday. So I think, just for perspective here, folks, we've been through these things for a while. And I think I've been told that 5 or 10 different technologies are going to eat my job, and accounting is not where you need to go so many times over the last 35 years. So I think Sasha's right to ratchet back the fear here.
yeah. So, this idea that AI will make accountants more valuable and not obsolete because the person that's in charge of the books will be in command of them. So it's really the accountant, not the AI models, that's the ultimate decider. So I think, Sasha, there were 3 or 4 things that I heard you say at these various presentations over time. And one of those is just about fear. So, one of the questions that people seem to ask is, will AI replace accountants? And maybe the better question might be, who's accountable when AI does the work? And that shift is really the whole conversation. And we've set that up a little bit, but talk to our listeners about what you're thinking there.
Yeah, the two narratives I think that are easy. I was actually thinking about this on my bike ride to the office before chatting with you guys. And I think it's accounting is just a complex industry. Everybody that's an accountant knows that, and anybody that works with accountants knows that. Now, if you're a press or a venture capitalist, it's kind of easy to oversimplify and think about accounting as a categorization exercise because you're not in the weeds. You've never done it before. You don't understand. We're trying to codify every type of potential money movement of our entire economy with full data, with partial data, with no context of data, just says cash out of the bank account. And so it's really easy to oversimplify this. All right. So I think then it gets to two really key points is this technology will be a step forward. It is a step forward in capabilities in software. When we went from we could put stuff on the internet to we could put stuff in the cloud to we have APIs and we could share data between stuff to now kind of some semblance of intelligence and knowledge work. But two things come to play. One is who is accountable? Accounting is invariably in the name an accountability exercise and job. If you generate some marketing message and it doesn't resonate, you maybe lose a client. If you generate inaccurate books because, quote, AI did so, and you have some autonomous or self-driving system, who's getting, is the IRS going to be like, oh no, it's cool, AI did it. That's okay.
Well,
don't worry that it's wrong.
And I will say that you're exactly spot on there because the IRS actually released the new version of Circular 230, and they've said some troubling things that they think if you bill by the hour, you should rebate the AI benefits back to the client. And they also said exactly what you just said, that whoever signs it is responsible. And I think that's the important thing here because the world is not black and white. The world is gray. And we don't have certainty on everything.
No, and this gets away. AI can only, just like machine learning and regression, and before that, it's only as good as the data inputs that you can provide. And so, if it says cash out in the bank account, or your bank statement is a little blurry, or there is no invoice or receipt, if you just see a transaction, like, what is that? The AI isn't going to be any better than a human in not knowing what to do. The difference is an AI is going to sound really confident when it guesses the wrong way. And so it gets down to who is signing off on the books. And maybe if you're a very simple sole prop content creator, you just have like a very side hustle business, it might be good enough. But if you are a partnership, you have small business, you have investors, you have debt, you have the IRS, like somebody is going to care about the accuracy of the books, and to care, you need somebody to sign off. So I don't think we're ever in a place where, any meaningful, sizable, small, medium, or large business is going to want to save 10, 20, 30, 50, 100, $200,000 to like hope that AI did it and sign off on liability. Like that, I don't think that's not a thing.
Yeah, so as I'm listening to you on that, a phrase I'm using this year, and I don't like my phrase, is good enough, right? Because so many people are trying to buy very specific solutions, in some cases overkill, as opposed to getting it good enough. And of course, Brian was our primary author on all the AI-powered ledgers, which, we've known you through the years as you were evolving this platform as one of those AI-powered ledgers. But, in your case, I think the options that people are reflecting on is the old manual way, which was accurate but slow and didn't scale, versus autonomous, which was fast, where the books could close themselves and so forth. But I think you've determined that there might be a good third path with the workflow that's following the firm's rules. And we did talk about that in another accounting technology lab, agents, where we have the agents applying rules consistently and preparing the work, and then we have people reviewing and so forth. So help us understand what's going on in your thinking on this.
So it's a good question. I think, let's take the acceptance that this technology exists and it is getting better over time. It's getting better because there's now reasoning to explain some of the black box logic. But the technology is evolving, and that happens regardless. I think how you implement that technology has a lot of implications, and I think it depends on who your customer is. So, for example, our customer is the accounting firm. And what does that mean? It means we defer to them as the experts, and we are a tool to help them amplify and scale their judgment. That's why I say I think accountants will make more money in the future. when we look back at, just to get a very specific example, when you look back at like the two major automations that we've had in the accounting practice, it's the bank feed, it's getting data from the bank into the system where the general ledger is, so you don't have to download and upload. And it's the if-then statement. If this vendor, then this category. There's a lot more to accounting than that. And I think when you think about what are the capabilities of agents or a more complex automation, it can do if-then statements. Now it shouldn't, because we already have code for that and it's cheaper and faster and more deterministic. But you can actually build deterministic agents for accountants as the experts. And so if we take the example, just to bring this to life, agents or automations using artificial intelligence can be probabilistic or deterministic. And the way that you make them deterministic is you need to rebuild and design the architecture for determinism. Now that's a bunch of buzzwords, so let me just kind of get a little more specific into here. When you type something in to our AI agent platform in Puzzle, the way that it's designed is it will say, if you opt into it, of course, this is not required or optional, because again, we view the accountant as the expert. It will say, here's what you wrote. Here's what I think you said. I've looked at whatever transaction, fixed assets, depreciations, amortization schedules, reconciliation. This is what I think you said. Here's what I think the application of what you said is. Does this look right? And if you say, you have to type in yes or confirm or some sort of positive affirmation, which will log into the audit log and save everything. It can then execute exactly what you want. You can schedule it, so it can happen when you sleep or when you log in. But is your judgment preserved, your intellectual property preserved? It just doesn't require you to log in and do the clicks every time. And then the difference is, because we sort of wrote little tiny software programs or functions for each individual step, what it does is it saves those exact steps in that exact order, and it can run the same thing every month deterministically, meaning the exact same way every single time. And that is really important for accounting. And so the two examples to bring this to life are, not surprisingly, we're a software company, so we buy a lot of computers for engineers. So you would have a policy that says, you buy this very expensive computer, you should depreciate it. Let's just say it's 36 months straight line, no salvage value, use the start date, the in-service date as the transaction date. You never have to do that ever again. It will just say, if there's a computer in this bank account or whatever level that you describe it, just depreciate it. Now you review it, it'll draft everything. You can say, just draft it, I want to hit send, or automatically depreciate it, and I'll just review. Or we did this a lot at Scaling New Heights. It was really fun. We just had crowds of people and we were just building agents in real time. There was another one that said, hey, listen, this specific client, they prepay their rent annually. So every once in a while, I don't know when it's going to be, but this landlord XYZ, assume this is a prepaid rent expense. If you see it, draft the prepaid rent expense, put it on the balance sheet, and then expense the rent every single month according to this schedule. And you just save it. And the agent looks every single month or every day, however long you schedule it, and says, find this thing. If you do it, draft to do it. There's all of these nuances between every individual client that you have to remember, you keep in your note sheet, you have to look individually. Well, like, you can preserve that knowledge and intelligence, run it deterministically every single month, and not have to remember. There's just like, thousands of these things that we built, a couple hundred at Scaling New Heights. But this can now be codified and saved and preserved for that firm's IP. Now, if that person who runs that client's books isn't you and they leave, your firm preserves that intellectual property so that client's books aren't at risk. There's so many fun applications of this. That's what we basically did for like 3 days straight at Scaling New Heights. We had a crowd of people and we're like, tell me the most crazy, weird, nuanced thing. Let's build an agent and just like show you how powerful this could be, but also how safe it can be. It's never going to make changes. You have to type in yes. So you don't log in and then wonder, what did AI change? Did it change my chart of accounts? Did it reclassify historical transactions? None of that happens, at least in Puzzle, because that's how we implement the technology for our clients.
Yeah, it makes great sense. Well, you don't know this about Brian and I, but I serve on the board of directors of a bank core processor, and Brian's wife is a VP at Regions. So we have some ties to that banking industry, but also I installed some of the first ATM networks. And, the banking system cold. And here in the US, it's kind of a jigsaw puzzle compared to global. So, you appreciate that more because you're doing it. But, this conversation about agents is important because we believe that agents will be like smart staff that we've had historically. And, on this, you've, I think, demystified it to a degree. So, where this agent is handling a defined task where it categorizes and reconciling and does matching and flags anomalies, all those are pretty important. But also, you've had the outcome surfacing that to a person so they can make a decision and say, go. So, that idea that it's a fast junior, staff manager, senior that never really signs anything, but kind of preps things, that seems to make pretty good sense. So, when you think about agents, what do you think your best definition of an agent in plain English is? Because we teach so many people, I'm still working for what I consider an ideal token definition and an ideal agent definition and so forth. So, what do you think an agent is in plain English?
An agent is a piece of software that executes a very specific task.
Yeah. And your
So
deterministic piece here is actually fascinating because so much of AI is so flexible and probabilistic, as you would say it. And the world of accounting is a little more precise, unless it's, 2 + 2, what do you want it to be? But, in the big picture of things, that's a nifty way to think about it. And the other thing that's so popular, Sasha, to talk about right now is this human in the loop decision and discussion, because we want the review. Brian properly called out the IRS Circular 230 information on that. But I'm listening to presenters talk about human in the loop, and I actually know they don't know what they're talking about when they're talking about it, but that's neither here nor there because everybody's saying it. And to me, the real test is when and how the human acts. So we can review things, after the fact, but I think Puzzle's approach and your approach is trying to have it reviewed before it posts, if I'm getting your strategy right. And in fact, then the accountant becomes the responsible party. So, I think that also makes sense. And I just happen to have the accrual intentions book. Brian got to sit in Ron Baker's session and they talked about that. And we are hopeful to have, Alexis Kingsbury is a future guest, probably will, frankly. But in the big picture, that's a very interesting approach for the human in review. So, what do you want? What do you think the listeners need to know about human in the loop?
so let's I'm as you're talking, the thing that's coming into my mind is if we accept and appreciate both the importance and the weight of the accuracy of accounting, and we abstract technology aside from that, what do we do to get to best practices in accuracy? You have somebody prepare, you have somebody review that is independent, and you kind of have somebody oversee it. And obviously, as you get bigger and bigger into public companies, you have even more reviews. You have preparers and you have reviewers, you have controllers, you have CFOs, you have auditors, you have auditors of auditors. There's a lot of best practices because it is so important. And the bigger and more complex your business gets, the more weight that deserves. So if we just think about how can technology accelerate the best practices, assuming the importance of accuracy and the weight of it at different stages, agents can play, or task automation can play a really important role here. And so you can create task and agents that are a prepare. You can also create task and agents that are reviewers, but you still, at all of this, want to have that level of control and sign off and accountability and auditability. And so how we design it is the same thing. There's a set of tasks that you create as your firm, your judgment. You just define it in natural language. We have built also a very complicated set of agents together that do some reviews to gap, to variance, to anomalies, look at clearing accounts, a lot of things where it's easy to kind of oversee, especially as businesses get bigger. That's a more complex sort of agent orchestration. We just make it so you click a button that says review my books. It doesn't change anything again, but it will list out between 5 and 20 different things. It'll mark it high, medium, and low. It will describe, here's what I saw. Here's why I think it's worth review. Here's why I think it's high. Here's some potential options to fix if you want. And then it spins up an agent to do this. So in the privacy of your own browser as an accountant, you can not only take your judgment, look at all of the different ways it's easy to make some mistakes. And we'd say it tends to captures about 9 out of 10 things that you would do in a review anyway. And then actually sometimes it catches stuff that you'd forget because we're humans and it's hard to oversee lots of different clients at the same time.
Yeah.
But still at every single step, it is who is the human, who is the accountant that designed this agent or this task? And it will say, AI on behalf of Sasha for this specific thing. And then you'll have the reviews and it'll say who clicked the review and who did it and who made any changes. But at the end of all of this, it still needs somebody to write in, yes, confirm, I am signing off that these books are drafted and finalized. And so human in the loop can get blurry, it can get important. I think at the end, though, it is who is accountable to the level of accuracy of the books. And our software is just a mechanism to help you get to your desired level of accuracy as fast as possible. Some businesses might not care that much, some care a lot, and some care to the weight of third-party audits.
Yeah, and that makes great sense. As you were talking about it, I just think about when people haven't slept well enough because the kids were up the night before, you're not feeling well, how easy it is to make mistakes. And I know at certain points in the day, I'm better than other points in the day. So, you just think about all this review that's going on. So,
What happens if your glasses are blurry? And all of a sudden I can't say like, hey, I'm sorry, I missed that transaction because I forgot my glass cleaner this morning, or like I took them off or they left in the other room. Like these things happen. And this can be designed to be a mechanism, again, not to replace you, but to make you the best version, to make your judgment executed to the highest degree of confidence. And that is what we see. That's what we build. That's what our firms tell us they like about what we build for them. And it is very possible.
Yeah, and it reminds me
So,
of the
so
old.
the analogy would be then that instead of a virtual reality that is driven entirely by AI, it's like an augmented reality where it works alongside us and makes us better.
As long as you can articulate what you want to happen in your moments of clarity between coffee, between sleepless nights, like you don't have to be in that moment. You can just, when you have a good night's sleep, you define your month close process as a set of agents, the things that you want to review. You can save them as a firm as templates. You can save them individually and just let it prepare and help you become your best version. So in the moments of sleeplessness, in the moments of insomnia, in the moments you stayed up late, in the moments your kids were crying, to the moments of perfect clarity, like it can help you be the best version of yourself all the time.
Yeah, and that whole concept, which many people refer to as flow, when you've really got that right, oh my, you can do some wonderful things. But for some of our younger listeners, they won't recognize this citing, but it's like the $5 million man of accounting. We just throw all these specialty things that augment the skill so much. And I've actually been enjoying Neil deGrasse Tyson's, Take Me to Your Leader book on aliens and the sightings that he's done in that recent release. Well, the citing you had earlier of accuracy and trust and domain fit, we talked about AI, which is probabilistic versus deterministic. And this accuracy thing still means that some of those entries are going to be wrong. So, what is protecting the firms in most cases are the process around the AI. So again, the review, the traceability with the human approval, and it's not some sort of a slider to try to get the right accuracy and so forth. But it's also why we'll call it third party systems that are closed transactions. They're going to do a different thing than I think that Puzzle might be able to do. And that trust really is the firm's product that is here. So just talk to us about where you see accuracy, trust, and domain fit.
I think it gets down to the point that we started this conversation, which is who is accountable to the books. And if you're using a system or if you've implemented an AI that is making changes without your knowledge or without your design or without your judgment, you're actually creating more work and more stress for yourself. And so those are helpful in some contexts, but our sort of view is the accountant is the expert. You just need too many clicks to get that expertise implemented. And AI is a supplemental tool. It's an augmenting tool, just like software, just like design, just like bank feeds, just like invoicing feeds and spend feeds and et cetera, that helps you just scale your judgment in a better way. Now, there is risks because if you don't design an agent the right way, it can make changes. And I don't say that to fearmonger. Like, it's better to play around with agents and accounting and AI and just get comfortable with it so that you can figure out what you feel comfortable with. But we've taken the approach that everything is opt-in, meaning you start in a clickable way, just like the legacy. You can opt in by transaction, you can opt in by balance sheet, you can opt in by reconciliation. It's a transparent system in which you choose the level that you feel comfortable with. And what we see is some people just go all in. And the results that we've seen from firms are we've closed all of our books on the fourth day of the month. We've seen results from firms saying we're giving everybody the last week of every single month off until we get more clients. We've seen firms say I can scale 3 times the size without needing to hire more people. And it is hard to hire now than ever before. This is not us claiming marketing. All we do is we sort of try and amplify the results of our firms, but it is possible now, and it is designed. We design in a very, what we think is the best way of safety. So, because we know not everybody is as AI pilled as I am sitting in San Francisco, like using AI across every aspect of my personal life and my family life. That is okay. Like people, everybody has their own comfort level, and our system is designed to where you have to opt in and you choose your comfort level. But we generally see that after people start playing around with it a little bit more, they're like, can it do this? Can it do this? Can it do this? Can it do this? And we don't promise it's going to solve all of the things that you can possibly think of and do and all the excuses, but it's getting pretty close.
Yeah, understood. And as I'm listening to you think about that, we do try to help our listeners understand the rails and governance that need to be around AI from both a privacy and security perspective. So it sounds like you've got a good bead on that. Further, as I'm just listening to it, again, old school, but in the old days of computer networking, Novell Network locked everything down and you had to open it up. And unfortunately, Microsoft took the opposite view, open everything up and then try to close the Pandora's box. And they've never really quite got the security Pandora's box reclosed. So in your point here on the labor, people routinely disagree with me, and I'm fine with them doing that. I'm thinking as these AI tools progress, that outsourcing will become less of a deal. Yes, we have talent shortage, but the fact of the matter is we're going to get so much leverage, I believe, with AI-powered tools that as people move away from legacy accounting software platforms into the new AI-powered ledger, I think it'll be far better to do accounting because you won't have to do all that tedious work. A rule of thumb that we've used over and over again, so listeners, I apologize for repeating, but if an accountant is keying data, I've got a broken process. And this really allows you to not be manipulating the data. You can actually look at the reporting and apply more judgment. And I hope that as things progress, we'll see more advisory opportunities and do that advisory work. But that's also a bit of a slow slog right now. So what do you see in terms of just talent shortage and maybe, other things in the future?
Well, I want to also acknowledge that if the accounting industry and the accounting software industry is one of the first cloud softwares and one of the first softwares of all time. So when we look around at a level of capabilities across almost every aspect of every other business, we're seeing really rapid advancement of capabilities. And the accounting industry has been slower to adopt. Now, I think the root cause of this is not the fault of accounting or accountants. It's just the fact that 30 years ago, you would build software a very different way than you would build today. And so it is totally okay to have said, listen, I've been using the same software for 20 or 30 years. I know where to click to do everything. Of course, a lot of legacy players change their UX all the time, but I have a workaround for all the things. And I have comfort and I'm nearing retirement or I just don't want to change. That's okay. What you'll do to solve is you'll hire people or you'll outsource. And that's a totally acceptable and reasonable solution. Now, I do think that the results that we are seeing from the firms that are leaning really into sort of both Puzzle and the AI capabilities, as well as other people in the market, is they're able to do the same amount of work in an unfathomably amount of short time, but without sacrificing accuracy. In fact, they say that all of these tools actually make the books more accurate. They have less client questions about what about this and what about this. And they're able to deliver a better client experience, faster results, and more insights along with that delivery. So you get happier customers that get the results faster, and you get, maybe a week or two off of every single month of their current client base. Let's not talk about tax time. There's always an anomaly there. So, to be fair, there's different ways to solve the talent shortage for an individual firm, not as an industry, but for the firm, and that is okay. But do I think in a year or 2 years that the majority of accounting preparation review is going to be clicking on a screen? No. AOL still existed for 10 or 20 years after they came out. It was just a different technology ago. And when you have the dial-up and you want to control the whole interface, but a lot of people felt comfortable for 20 years after Google and broadband and modems and T1s took over. It is okay. There's a market for everybody, but I do think that those that lean in are going to make more money. There's just no way to say you can work less at a higher margin with happier customers for a long time. If those are the two ultimate choices, it's hard to, that old model, it can't be around forever. They'll lower prices, which we hope they don't. They can raise prices because they're delivering a better value product. They're taking off a week or two almost every month outside of tax season. Every month. Could you imagine having a week of vacation every month and making the same amount of money? This is a paradigm shift that is just starting to emerge this year. So it's okay if last year you were like, I tried AI, it doesn't work. Agents were not commercially available until January of this year. This is a brand new thing. And so it's okay that you're not too late. You can tip your way and work your way around.
Yeah. So Sasha, saying that, I'm going to pick on you here a little bit because obviously gray hair in the beard. And as it turns,
me too.
Yeah, just a little. And, Brian and I have earned that too. But I was reflecting on the legacy software because I was the original designer or assisted a lot of these SaaS-based products. And I hadn't actually registered. It's right on 30 years ago because we did that work in 97, 98. Right. And, so QuickBooks Online and Sage Intacct and NetSuite, I sat in the room when we were doing the design on that stuff using the tools of the day. You wouldn't build products like that today. That's just not the way it would be. So notice this, and the concept, by the way, of the week off per month. I've lived that life where I took a week off every month, and people said, how are you doing that? And so, nowadays we're trying to automate enough that son Dave can actually take about a week off a month. And, yes, we're working probably harder at other times than we should, but that choice should be yours. You shouldn't be a slave to your accounting software. So, Brian, I'm sorry I stepped on you there.
Oh, no. Thank you for sharing your time with us. We'll be back next Saturday with a new episode of The Technology Lab from CPA Practice Advisor. Have a great week.